This is Ralph Vince, and I want to speak to you today about the red compression indicator. This indicator works equally well on futures, forex, and equities. Let's take a look at it on an equity right now. I pick Apache, and I'm going to pick 1 day for 1 year. So we're going to look at this on daily bars. I go over to my indicators now, and I select red compression. I'm going to go to properties, and you'll notice that the formula calls for 6 bars, which is typically what I use for weekly data. For daily data, I'm going to use 13 bars. These are just typical values. You might want to experiment with others and find better values for yourself. I add this to the chart, and here we see the indicator. This indicator tells us when we should be looking to trade breakout style systems and when we should be looking to trade counter trend style systems. Low values for the indicator tell us to be looking to trade breakouts. Higher values, when they round over, tell us we should be looking to trade counter trend strategies. Like with Apache here, as we see in October. Notice the steady climb up in the index corresponding to a declining trend, very well defined in Apache. Once this rolls over, it tells us we should now be looking to trade counter trend strategies. And we'll continue to trade counter trend strategies until we either see a very low value for the indicator, which did not happen after this rundown in Apache, but rather when we have a breakout from a consolidation area in the indicator, such as we see here in mid-November, telling us once again to look to be continuing a trend in this particular tradable. Let's look now at gold, and I'm going to look at this on a daily basis. Here we have gold, daily data, 13 bars used in our red compression calculation. Low value readings in the indicator tell us we should be looking to begin trading a breakout style system. Once we have a breakout from these low readings, we know we're entering into a trend. As we see here with gold, around 523 to 527, 2014. Once the indicator goes up and rolls over, it tells us once again, trend is over. You should be looking to trade counter trend strategies in this indicator. And we see this around 6/3, 2014 in gold. Let's take a look at the S&P. And here I've set my indicator to 6 bars because I'm looking at weekly data, 1 week for 5 years in the S&P. Notice that low value readings in this indicator, such as we saw in the early part of 2013, tell us we should be looking to trade breakout style systems for a persistent trend. Higher value readings in the indicator, such as we see around mid-May of 2013, tell us we should then be looking for counter trend type strategies. What's high in one market may not be what's high in another market. Johnson & Johnson doesn't trade like Apache. The S&P index doesn't trade like gold. You need to tune it to whatever market you're particularly looking at. This indicator I began trading over 30 years ago on hourly data on value line futures. It stood the test of time, and I'm very proud to see the red compression indicator as part of TradeShark's indicator package exclusive to TradeShark. Thank you.